Are you tired of waiting months just to collect your dividends? What if you could transform your dividend strategy and start receiving payments every single week instead? Imagine the freedom, peace of mind, and financial security you'd have if your income never stopped flowing. In today's video, I'm going to reveal exactly how you can create a powerful 12-stock portfolio designed specifically to deliver dividend payments every week. Not only will you get reliable weekly income, but I'll also show you how this same strategy steadily grows your investment's value over time, even if you choose not to reinvest those dividends. This is the strategy that turns ordinary dividend investing into extraordinary weekly cash flow. Stay tuned, because once you see how simple and effective this method is, you'll wonder why you ever settled for quarterly payouts in the first place. Part 1. The quarterly problem and portfolio concept. Let's talk about the biggest problem with dividend investing: the dreaded wait. Most stocks only pay out once every 3 months. That's 90 days between paychecks. If you're relying on that income, it feels like forever. But here's the fix: a 12-stock portfolio. That's right, 12 individual dividend-paying stocks, carefully selected so at least one pays out every single week. 4 weeks per month, 12 weeks per quarter, every week, money hits your account. But you can't just throw together any 12 stocks. They've got to meet 3 strict rules. Number 1, high yield only. If the dividend checks aren't big enough to move the needle, what's the point? These picks need to pay you real money, consistently. Number 2, safety is king. We're not looking for risky moonshots. These companies need a track record of stability, strong earnings, and the kind of balance sheets that weather storms. Number 3, diversification. You don't want all your income tied to just tech or just real estate. This portfolio is spread across multiple sectors: energy, healthcare, consumer goods, finance. So if one industry dips, the others keep your income steady. Build it right, and you're not just collecting dividends. You're unlocking a system, a weekly paying, low-stress, cash-generating machine that pays you like a second job, without working one. And in the next few minutes, I'll show you exactly which stocks make the cut, how much they pay, and how you can start collecting weekly payouts immediately. Let's build this portfolio, step by step. Part 2. Low to mid-yield picks. Now let's kick things off with the foundation, the first 4 dividend stocks that set up your weekly cash flow system. These picks are your bedrock: stable, high-yielding, and diversified. They're here to give you peace of mind while consistently pumping income into your account. First up, Armada Hoffler Properties, ticker symbol AHH. This is a real estate investment trust, or REIT, that builds and manages everything from residential buildings to commercial spaces across the U.S. Right now, it's dishing out a dividend yield of 7.29%. That's solid. What makes AH stand out is its balance. It's not just about high yield, it's about safe high yield. It grows steadily and pays reliably, which is exactly what you want anchoring your portfolio. Next, Delek Logistics Partners, ticker DKL. This one's in the energy space, but it's not swinging wildly with oil prices. Why? Because DKL doesn't drill. It stores and transports petroleum products. That's a much more stable part of the supply chain. And get this, 8.49% dividend yield. Thanks to long-term contracts with major oil players, this thing pays you like clockwork. Third up is Physicians Realty Trust, ticker DOC. Another REIT, but this one's laser-focused on healthcare facilities, especially medical office buildings. It's not flashy, but it's dependable. With a yield around 6.5%, it's a rock-solid income stream from one of the most recession-proof industries out there. Healthcare isn't going anywhere, and neither is this dividend. And the fourth, CTO Realty Growth, ticker CTO. This REIT goes after retail and office spaces in fast-recovering markets. It's smart, selective, and offers geographic diversity on top of sector exposure. Current yield? 8.07%. It adds more protection and a growth kicker to your dividend plan. These four give you a strong, diversified foundation with exposure to real estate, energy logistics, and healthcare, all pumping out consistent cash. But don't stop here. The next batch of stocks will take your income to the next level with even higher payouts and sector variety. Let's keep building. Part 3. Mid-Yield Picks. Consumer Plus, BDC Exposure. Here are the next batch of income-generating machines. 3 mid-yield picks that are designed to boost your weekly cash flow while giving you a healthy dose of diversification. First up, Altria Group, ticker symbol MO. Whether you love it or hate it, this tobacco giant has one thing investors can't ignore: reliability. With a dividend yield sitting at around 7.02%, Altria has raised its dividend for 54 years straight. That's more than 5 decades of consistent growing payouts. You're looking at about $4.08 per share, paid like clockwork. If you're focused on cash flow, Altria is a powerhouse. But hey, if investing in tobacco doesn't sit right with your values, feel free to skip it. This portfolio gives you options. Next up, Verizon Communications, ticker symbol VZ. This one's a total game changer for consistent income. While some companies drop off the dividend map, Verizon keeps showing up quarter after quarter, year after year. We're talking about one of the largest telecom giants in the world. People might cut cable, but they're not giving up their phones. And Verizon's network is everywhere. That's why this stock delivers a rock-solid dividend yield of around 6.29%. That's real cash flow, paid like clockwork. What makes Verizon such a killer pick isn't just the yield. It's the reliability. In a portfolio built for weekly income, you need companies that don't flinch when the market wobbles. Verizon's services are essential. Their customer base is massive. And their payout history? Consistent. This isn't a flashy growth stock. It's your workhorse. It shows up. It pays. It keeps your income stream steady while other stocks drop the ball. And now, the VanEck BDC Income ETF, ticker symbol BIZD. This is where things get interesting. BIZD focuses on business development companies, those behind-the-scenes players that fund small and mid-sized businesses. These are companies regular investors usually can't access, but through this ETF, you can. The result? A juicy dividend yield of about 10.55%, or roughly $1.78 per share. That's high cash flow with built-in diversification across dozens of BDCs. Now, let's take it to the next level with high-yield stocks. Part 4. High-Yield Power Picks. Let's turn up the heat, because now we're getting into the high-yield power picks. These are the dividend beasts, the ones that can seriously crank up your weekly income. If you want bigger checks hitting your account more often, these 5 picks are where things start to get really exciting. First up is Saratoga Investment Corp., ticker symbol SAR. This business development company specializes in funding middle-market businesses, the kind of companies too big for a credit card, but too small for a bank loan. The reward? An eye-popping dividend yield of 11.68%. That's nearly $3 per share every year, just for holding the stock. Stable, consistent, and high-powered. Next, VanEck Mortgage REIT Income ETF, ticker symbol MORT. If you've ever wished you could cash in on real estate without becoming a landlord, this is your move. MORT gives you exposure to mortgage-focused REITs that pump out cash from residential and commercial mortgage investments. The result? Big dividends, low effort, and instant diversification across multiple mortgage companies. Third, Arbor Realty Trust, ticker symbol ABR. This real estate lender focuses on multifamily and commercial loans and delivers a consistently high yield. They've got a solid track record and specialize in short-duration, high-yield real estate deals. Translation? You get steady, reliable income, and you don't have to wait long for it. Next, Natural Health Trends Corp., ticker symbol NHTC. This one's a wild card with serious upside. They operate in the e-commerce wellness space, and as of February 2025, they're paying out a jaw-dropping 15.9% dividend. That's 80 cents per share in pure income. Health and wellness is booming, and this company is riding that wave with confidence. Last but not least, Euronav, ticker symbol EURN. This global oil tanker giant transports crude oil across oceans, and it's not just floating steel. It's floating cash flow. With a yield over 17%, Euronav brings in serious income while positioning itself as a key player in global energy logistics. Put these 5 into your portfolio, and you're not just chasing yield, you're building a high-octane, weekly paying income engine. And coming up next, we'll show you exactly how to line up the payout dates so you get paid every single week, like a paycheck. Part 5. Timing and Cash Flow Mechanics. Now let's put it all together and break down exactly how this dividend strategy works to pay you every single week. The secret to getting weekly dividends lies in timing. You have 12 carefully chosen stocks, each paying dividends quarterly. But here's the key. Their payout dates are staggered. By strategically selecting stocks that pay at different times, you guarantee steady dividend income every week of the year. Here's how this looks practically. Let's say you invest $10,000 into each of these 12 dividend stocks, totaling $120,000. To calculate your weekly payout from each stock, you simply take your investment amount, multiply by the stock's dividend yield, and then divide by 4, because dividends are paid quarterly. Let's quickly run the numbers for January as an example. Your portfolio includes 4 stocks paying dividends this month. If you calculate each individually, your first stock might pay around $270, the second might pay $339, the third $182, and the fourth $205. This brings your total dividend payout for January to around $996. And remember, this is just for January. Each month, 4 different stocks from your portfolio will pay dividends, delivering cash into your account consistently, every single week. Over the course of a year, these payouts repeat, creating a steady, predictable flow of income. The real beauty of this system is that you're not waiting months for dividends. You're getting paid every week, like clockwork. And even if you don't reinvest these dividends, your portfolio itself continues to appreciate, averaging around 5% per year. So not only are you generating immediate weekly income, but you're also growing your overall investment without lifting a finger. But here's the deal. Just knowing this isn't enough. You have to take action. First, review your portfolio. Are you sitting on stocks that barely pay anything? It's time to switch things up. Second, diversify smartly. Don't just chase high yields. Spread your risk, cover multiple sectors, and make sure those dividends keep rolling in even during market dips. Third, stay updated. Markets shift. Companies change policies. Be ahead of the game so your cash flow never stops. If you've made it this far, I have a powerful dividend investing guide designed just for you, and it's completely free. This guide includes a list of the 12 best dividend stocks, a dividend payout schedule, and a printable tracker to help you stay consistent with your cash flow strategy. All you need to do is comment dividends on this video. Once we reach 50 comments, I'll share the link for everyone to download. Now that you've got a steady stream of dividend income, what if you could supercharge your portfolio with long-term growth? The right index funds can help you build serious wealth while keeping things simple and stress-free. In the next video, we'll break down the 6 best Fidelity index funds that you can buy, hold, and watch grow. Don't miss it.